that U.S. China tensions is currently having an impact on the equity market. But now, like from a multi-asset standpoint, how do you want to position from it? And I would say that keeping some reserve value in portfolio makes sense. And we think that gold continues to be a good candidate, even if we don't allow the investors at this point to be overweight max on it.
Sophie, it seems to me if you buy gold and you believe in holding gold through the coming period, then you have to take a view on the economic outlook. But as I look at your baseline scenario, you are anticipating a V-shaped recovery into 2021. How do you reconcile wanting to own gold with that style of economic rebound?
That's a very good question. So, yeah, it's clear that our main scenario is like more V and a swoosh. So it's not an L-shaped recovery on, I guess investors are quite worried on, or W if we have a second wave of COVID-19, so further lockdown situation. But we think that gold continues to be a reserve value, but from a multi-asset standpoint, and treasuries provide less protection than before at a time where the Fed hasn't signaled yet that they will want to go lower than the zero lower bound. Gold at this point provides some protection at the same time as if you look at the benefit of holding gold in a multi-asset portfolio, it basically boosts your Sharpe ratio and it basically provide some protection to your portfolio in case of inflation surprising to the upside or yield curve steepening as we get ready for the post-COVID-19 world.
Sophie, we had some dreadful Japanese data overnight. Again, it just seems to reconfirm this impression that the Japanese economy is still struggling to find another growth gear, COVID-19 notwithstanding. And yet, in equity terms, you prefer Japan over Europe. Why?
It's basically on the shareholder out story. What has been driving the market and worries, especially for investors, has been the outlook for dividends and buybacks, but also how strong the balance sheet companies, or at a time where financing needs, those that are super leveraged, those that are not going to pay any dividends, so dividend cuts, which sends a strong negative signal, are going to struggle. And we think that Japanese equities versus the other developed market peers are kind of the safe haven where they're cash rich. They're going to maintain their dividends. So we think that from a relative perspective, Japanese value characteristic are still attractive.